My name is Nella Oluoch. I work with Keypetbooks, a financial services firm that uses technology to offer outsourced accounting services to early-stage startups and small businesses serious about progress in order to arm them with analyzed data so that they can be able to form better long-term financial decisions. My talk today is on machine learning wave in fintech. And before I start, you must all agree that in this current pandemic crisis, there's an accelerated use of AI and machine learning in redefining how fintech is carrying out its tasks. In the current pandemic crisis, the fintech industry is getting stronger and stronger. Of course, many companies have been badly affected, but many more are quickly adapting to offer their services in this world's new reality. Now, when you look at data science in general, it is broadly categorized into statistics, data warehousing, and AI and machine learning. Statistics is concerned with turning data into something by finding patterns and identifying relationships that could be of use to a business. Whereas data warehousing is a central repository for reporting or for storing data analytics. And then AI is the broader concept of machines being able to carry out tasks. Machine learning is a branch of AI that is based on the idea that machines have the ability to learn and form adaptive behavior in the process without being programmed to do so. Deep learning, of course, is a subset of machine learning that it attempts to simulate how the human brain processes information. Deep learning, of course, requires more data than machine learning in order to create viable models. When you look at the evolution of artificial intelligence, references of AI can be traced back to ancient times, as far back as 1950s. The understanding of the human brain together with development of technology has led to the improvements, has led to the advancements we see today in AI and machine learning. There's a shift of focus from IT-led reporting to business-led self-service analytics. The traditional platform reports governance only, allowing access to specialized reporting groups. The modern platform views data governance as a step towards creating self-service analytics. So where the traditional platform could take months and months to implement, the modern platform takes as little as a few hours. Latency is no longer tolerated. The advancements in the internet have led to greater expectations and less patience. Every business process is an analytics process. Every business user is an analytics user. The BI platform tends to democratize analytics with self-service capabilities. So now let us focus on how machine learning is transforming the fintech industry. In a typical economy, the financial services sector is made up of banks, insurance companies, credit and payment processing companies, etc. All these firms have enormous volumes of historical data because of the large volumes of their customer transactions on a daily basis. Machine learning is making significant inroads in the fintech industry. Why should fintechs care? What solutions are fintech implementing with AI and machine learning? And how exactly is the fintech industry implementing this technology is something we're going to find out here. So fintechs take machine learning very seriously, and they do it for a number of reasons. One, reduced operational cost due to process automation. Two, increased revenue thanks to better productivity and enhanced user experience. And three, better compliance and reinforced security. So having understood that, what are some of the ways fintech apply machine learning? Because machine learning depends on big data, and the data helps the algorithms create the right models that can make intelligent decisions. So naturally, the financial services industry is a great fit for machine learning algorithms. First application is financial forecasting. Fintech uses past information to predict future growth possibilities. Forecasting depends on industry trends. While older industries have lots of information, new industries with fast growth rates make it very difficult to create viable models. But machine learning algorithms can pick up even slight variations in data to create more reliable models. For example, Uber uses machine learning for financial forecasting. Today's spreadsheet forecasts only provide single source two-dimensional tabular reports on current period information, but analytics opens up a world that allows us to see in multi-dimensions with 360-degree views information, current, historic, and future business outcomes. Analytics allows the modern treasury department to take a proactive, thoughtful approach to their cash forecast model. The second application of machine learning in fintech is cybersecurity and fraud detection. Online financial transactions are fraught with cybersecurity threats and possibilities of fraud. You can imagine all those transactions. It's impossible to monitor all the transactions to detect an anomaly. Machine learning algorithms can provide both network security and financial monitoring. You have to remember that cyber criminals also use micropayment bots to avoid getting caught. Machine learning helps automate financial crime detection. Now, still focusing on fraud detection, if you look at Citibank has an example, a very good example. Feedzal AI, a fraud detection machine learning platform that continuously scans large volumes of data to recognize emerging threats and alert customers in real time. The other good example is Zendrive. It's a mobile app that monitors the driving behavior of customers to potentially offer them significant discounts on car insurance premiums. Of course, this is a contrast with the current models of insurance pricing that use variables like age, education, marital status, etc. The third application of machine learning in fintech is credit scoring. Machine learning helps banks, credit card companies, insurance companies to measure the risk profile of their customers. In the past, or previously, these organizations had to make decisions on a limited number of data points. They had the information on their customers, but there was no good way to turn that information into meaningful knowledge. Machine learning algorithms are better at using data to create better risk models. The other application of machine learning in fintech is digital assistance. Now, if you hire human labor to record those many transactions or for customer support, you can imagine it can be very expensive. In the past, financial institutions have tried using chatbots to answer customer queries, but the answers were limited. And those answers were only straightforward answers. So with machine learning, the new generation of intelligent bots can address more nuanced financial queries. A good example is the Wells Fargo Facebook Messenger chatbot, which is capable of complex conversations with its customers. The next application of machine learning in fintech is the algorithmic trading. And from my slides, you are able to have an idea of what I'm talking about. This is basically automated trading. Machine learning has ushered a new age of algorithmic trading. Quantitative hedge funds, they are using machine learning to make more accurate decisions. The other very important application of fintech, of machine learning in fintech, is mobile payments. Mobile devices have spread all over the world. Nearly everyone owns a mobile device. With the help of AI-based algorithms, these devices can turn into financial transaction machines. Machine learning algorithms, they make the mobile payments smoother than credit cards or other forms of payment. And then also chances of errors are slim because mobile payment uses machine learning-based fraud detection to prevent unauthorized access, which is much, much better than traditional methods credit companies use. Okay, so with all these applications, the fintech industry is facing new challenges. They're trying to figure out next generation digital platforms, mobile transactions, online security, etc. They are looking for cost-effective solutions. One of the challenges is fraud. Machine learning helps to prevent fraud. But it is also possible, like I mentioned, cyber criminals can use the same machine learning based tools to actually defraud the customer in future or the people in future. The other one is legal issues. When a person in fintech makes a mistake, for instance, the institute is held responsible for that particular mistake. So the legal question here is whether the same applies to the mistake of an algorithm. The other challenge is data privacy. Data privacy, because machine learning is dependent mainly on data, and then financial data is very private and very sensitive information. So machine learning tools will raise privacy concerns. So despite these challenges, however, many fintech already take advantage of this technology. How? First of all, because I mentioned earlier, because of the cost effectiveness, due to the process automation. It reduces labor costs through the automation of human labor, thereby leading to significant savings. Number two is the operational efficiency, because machine learning streamlines operations and processes. It increases productivity and it enhances the efficiency of any financial operation. Number three is because of security, because machine learning provides both security and fraud prevention capabilities for the fintech industry. So before I conclude, I would like you to carry very key important points. Key takeaways I want you to take with you. One, before collecting data, you need to have a clear view of the results you expect from data science in general. There is need to set viable KPIs and make realistic estimates before the project starts. Two, many fintechs, they need data engineering, statistics, and data visualization over data science and machine learning. The other takeaway is the bigger and cleaner a training data set is, the more accurate results a machine learning solution produces. There is no universal machine learning solution to apply to different business cases. The R&D in machine learning is costly. And finally, tech giants like Google create machine learning solutions. And if your project concerns such use cases, you cannot expect to outperform algorithms from Google, IBM, or even Amazon. So, as I conclude, what is the future of machine learning in fintech? Fintech will of course continue to use machine learning and deep learning. However, privacy concerns are still very important to many people. Therefore, they will have to address these privacy concerns to have a wider acceptance of their AI-based services. I want to thank you so much for taking your time to listen to my talk. I'd like to remind you to meet me at the speaker's lounge after this presentation for a question and answer segment, any comments that you may have or any suggestions. Thank you very much.